Dividend stocks are a great way to build wealth, but not all dividend stocks are worth holding forever. Some cut their dividend and others I'm just not as optimistic about their future. But in this video, I'm going to show you my top 5 dividend stocks that I'm buying right now and I plan on holding them forever. But before we get started, make sure you subscribe to my channel. I'm going to be posting videos regularly about my stock market research that includes high growth, high yield, and unconventional ways to make money in the stock market. So these are buy it and forget it type of investments. Literally since I could buy stocks for like 10 to 15 years now, I've been doing stock market research, just looking through everything that is available for you to buy. These 5 stocks have always really stood out to me, and they all have one key feature in common. So they are all members of the S&P 500 Dividend Aristocrats list. And if you've never heard this term before, a Dividend Aristocrat is a company in the S&P 500 that has paid and increased its base dividend every year for the past 25 consecutive years at least. All right, let's get started. Number 5, the first stock on this list is Realty Income, the ticker symbol O. Realty Income is a real estate investment trust, so a REIT that owns over 11,000 commercial properties, mainly in states like California, Texas, Florida, and a lot in the UK as well. The cash flow comes from the lease agreements that they have with these commercial tenants that helps pay the dividend. This company has increased its dividend a total of 109 times through its 52-year operating history. Let's look at some key metrics about this stock. So the price the day I made this video is $64.69. It may have changed a little bit since then. The PE ratio is 60.47, so the price per earnings, so it is profitable. The estimated dividend yield is 4.6%, which is pretty decent. The market cap is $40.56 billion. And if you look at the stock over the past 2 years, it's pretty flat, but you're getting these consistent dividend payouts, so dividend stocks usually don't grow as much. You can also see it took a big hit here between July and October 2022 of this year. That's probably due to the interest rates rising. So the market probably thinks that their properties are worth less money, even though the cash flow is likely the same. Let's also check out the analyst opinions and see what they have to say. So the recommendation rating is 2.3, with 1 being a strong buy and 5 being a strong sell. And if you take the average of 15 analyst price targets, you get $69.03, which is about $5 more than the $64 that we're at now. This is a great stock if you want consistent dividend growth with a reliable source of income through the commercial real estate lease agreements. All right, number 4, the next stock on my list is Dover, with the ticker symbol DOV. Dover is a manufacturing company that makes almost everything, especially heavy equipment that's used by other businesses. I mean, think like gas station pumps, or equipment in auto repair shops, or actual manufacturing equipment. So they manufacture the machines in manufacturing, which is why most people have never heard of them or even ever bought their stuff. And this company has increased its dividend for 67 consecutive years. Let's look at some key metrics and take a look at the stock price. So the current price is right around $142 on December 13th. The PE ratio is 17.43. So if you remember the last one, it was in the 60s. So this one is a little bit more realistic, the price to the amount of earnings you're getting. The estimated dividend yield is 1.43, so the dividend yield on this one is a lot lower, and the market cap is $20.14 billion. On this stock, I wanted to show you the 10-year growth chart. You can see that over the past 10 years, I mean, this stock has been pretty great, not as great as like Tesla or something like that. It's gone from, right about $50 to almost to $150. This has been a great investment that has paid dividends regularly. Let's also look at the analyst opinions and see what these people have to say. So the recommendation rating for this stock is a 2.2, with 1 being a strong buy and 5 being a strong sell. The average of 14 analyst price target is 144, which is just a little bit above the 141 current price. This is a great stock if you want exposure to manufacturing, especially if you think manufacturing will continue to increase in the United States. It is also the first stock on the list of Dividend Aristocrats, since it has the longest consecutive streak of dividend increases. So number 3, the next stock on my list is Becton Dickinson and Company. The ticker symbol is BDX. Becton Dickinson, or BD for short, manufactures healthcare supplies, which includes devices used in hospitals, laboratory equipment, and diagnostic products. They also make a ton of products related to COVID-19, like at-home testing kits, for example. What I like about BD is that they're in the manufacturing industry, which I'm bullish on and I think will continue to grow. And they manufacture healthcare products, which is an evergreen niche that, will never lose demand. Let's look at some key metrics and take a look at the stock price. So the stock price at the time of writing is about $254 a share. The PE ratio is 42.43, so this one falls right in between the last two stocks that we've looked at. The estimated dividend yield is 1.4327%, and the market cap is 71.99, so right about $72 billion. Looking at the 10-year chart, you can see the stock had a great run up 2013, to right about 2019, and then it's kind of slowed down. It's been stagnant from 2019 to 2022. You would think with COVID-19 and then manufacturing all this stuff that it would have had some growth, but it doesn't really look like that was the fact. Let's take a look at the analyst's opinion of this stock. So the recommendation rating is a 2.2 on the same scale that we've been looking at, 1 being a strong buy and 5 being a sell. An average of 13 analyst price targets is $266 a share, which is about $12 more than the $254 a share that we're at right now. This is a great stock if you're willing to buy and hold forever. As you saw from the chart, it's been pretty stagnant since 2018. This company has recorded 51 years of consecutive dividend growth. Number 2, the next stock on my list is 3M, so the ticker symbol MMM. 3M is an extremely diversified company that manufactures everything from healthcare, electronics, and consumer goods. They make a few things that you probably even have lying around the house, like Post-it notes, command strips, and Scotch tape. 3M has had 64 years of consecutive dividend growth and payouts, which is second on my list, only behind Dover, which was the number 4. Let's look at some key metrics and take a look at the stock price. So at the time of writing, this stock was right around $127 a share. The PE ratio is 11.05, so this is actually the most affordable stock that we've looked at yet. The dividend yield is 4.6985%, so that is also, I think, the highest dividend yield that we've seen so far. The market cap is $70 billion. As you can see from the 10-year chart, it's been pretty flat. You had some great growth there from 2013 to 2018. In 2018, you were probably thinking that you made the best decision of your life buying this stock. And since then, it's down about 50% from the high of $250 down to right around $126 a share. Let's also look at the analyst's opinion and see what they think about this stock. So this one has the lowest recommendation rating that we've seen at a 3.2, right? The other ones were around a 2.2 to 2.3, and on a scale of 1 to 5, with 1 being buy and 5 being sell, this one's a little bit about a point lower. And if we look at the average of 17 analyst price targets, we're seeing that the average price target and the current price of the stock is almost the same, 129 versus 127. In retrospect, there's really not much different there. What I like about 3M is how many different business units and industries they actually have their hands in. People always talk about stock market diversification, but you can also have diversification at the individual stock level with a company like 3M. The number 1 stock on my list to buy and hold forever and never sell, give it to your kids, is Automatic Data Processing, the ticker symbol ADP. ADP is a cloud-based human resources management software. I'm sure that most of you have probably heard of ADP already, and you probably use it at your job for things like payroll or requesting time off, etc., things like that. ADP is a massive company. I mean, so many companies out there use ADP to do their human resources management. It's also a rare occurrence to have a stock like this in the Dividend Aristocrats, since most software companies do not increase their dividend and let alone pay a consistent dividend at all. ADP has been increasing their dividend for 48 consecutive years. Let's take a look at the stock price and some key metrics. So the stock price is right around $262 at the time of writing. The PE ratio is 36.63. The estimated dividend yield is 1.89%, and the market cap is $109 billion. So this is the biggest company that we looked at so far. If you look at the stock growth over the past 10 years, I mean, wow, what a great decision this has been. From 2013 to almost 2023, I mean, this stock is up 5, almost 6x. So not only have you had the insane price growth, this thing has paid a consistent dividend the entire time. Let's also check and see what the analysts have to say about this stock. I was a little surprised when I saw this rating of a 3. I was expecting more of a 1.5 to a 2 because I'm a little more bullish on this stock than some of the analysts, it seems like. If we look at the average of the 17 price targets, so they actually think this stock is a little overvalued right now by about $10. So the stock is currently at about 262 and they think it should be right around 252. Not too much of a difference there, but it does show that the analysts are a little bit more bearish on this stock. I really love this stock. I mean, it was first on my list for a reason. I love the fact that it's had consecutive dividends paid out, and I also love the fact that it has high growth potential since it's a cloud-based software company. This stock is also nearing all-time highs, and it really doesn't show any signs of slowing down anytime soon. That's it for my 5 dividend stocks that you should buy and hold forever. They're all members of the S&P 500 Dividend Aristocrats list. I really hope you enjoyed this video. If you did, make sure you like it and subscribe to my channel to find out more about my stock market research. I also need to clarify that this was not financial advice. I'm showing you what I found through my research and the stocks that I like, and you should certainly do your own research as well before you put any of your own money in the stock market.